let's buckle up, tighten the chin straps, let's get into some questions in the hockey helmet, and let's see what people have sent in this week. What are the pros and cons of using a mortgage broker versus a bank? Well, here's the reality of it. A lot of banks at the qualifying criteria that needs to be used aren't approving a whole lot of people. Okay, so you need a broker, an experienced broker that has access to alternative financing, private financing, to give you the solutions you need for this period of time to get through the next 12 to 18 months. Now, I call private mortgages bridges and band-aids. Okay, they're bridges that get you over a hump to a certain place in time, or a band-aid to fix a problem that is temporary. Okay, private mortgages shouldn't be long-term. They will erode your equity and eat you up and spit you out. Okay, so deal with a pro, deal with someone who's been around, understands the options available, and isn't gouging you. And a lot of people are fearful of shopping tough situations because they don't want to share their problems with multiple people. But if you feel you're being gouged, I encourage you to shop around. Okay? Don't feel that you're tied to a certain broker who's gouging you on their fees. Okay? The average broker is charging 1 point. Okay? There are brokers that'll do it for less. Okay? So shop around, understand who you're dealing with, and ask how long they've been around. How many private sources do they have? Do they have just one or two, or do they have many? Because right now, you should be dealing with a mortgage broker that has multiple sources of private funds and alternative solutions, so that way they can shop it around for you and not just pigeonhole you into one particular lender. Okay? Thank you. Some economists think we will see a mild recession in 2024. What are your thoughts on that? Well, we are in a recession. And it's not going to be mild. It's going to be ugly. Things are starting to break. When the food banks are seeing 50% increases in usage, and you have people who have jobs using food banks, we have a problem, a big problem. And the fact is, we are in a recession. So it's not a mild one. It's going to be ugly. So be prepared, anticipate what's coming, and know that at some point it'll pass, but you have to weather the storm, and you could do that with preparedness. So budget, know your financial situation, understand how much debt you're carrying, and if you have an opportunity to get rid of some, do so. You're going to be better for it. Have things slowed with the interest rate hikes? How is your job different than, say, 1 year ago? I must say that I am very appreciative of all of you people that watch the show on a regular basis. A lot of you reach out to me. We are busy. We are busy helping people deal with their situations. They don't always turn into mortgage transactions, okay? But what it does, it gives somebody a voice to speak to that could provide them some guidance and some help. We are busier than last year on units. We're busier volume-wise. We are not as busy on the revenue side. The revenue side is taking a hit, and the reason being is we're just trying to be very fair with people. We're trying to give people breaks. We're trying to really work with folks to help them out, and we encourage people to keep existing mortgages at the rates they have and maybe look to blends, right? So when you do blends and extends, as a mortgage broker, we don't get paid as much. We get paid less. And that's okay. That's fine, because it's the right thing to do. So when people are just saying break your mortgage and refinance, well, hold on a minute. Wait. It's not always the best decision, because you have old rates that you've negotiated 2-3 years ago. You want to use the full term of them. So when a mortgage broker is asking you to break your mortgage all the time, ask, can we do an assessment and a cost-benefit analysis on whether it's better off to keep that and maybe look at a private, keep that and do a blend and extend? If you qualify for that under the new stress tests, you have to look at all the options and assess them and digest what's best for you, okay? So I encourage people, if you're in a situation where you need that help, reach out to our team. We're going to give you all the goods and the options to think about so you make the best decision for you and your family. Where do you get your awesome t-shirts? Thanks for that question. Johnny from the Coop. Okay, I think their Instagram handle's the Coop Inc. John's got some of the greatest t-shirts around. I try to give him some ideas because I like the retro stuff. But John from the Coop at Leslie and 401 area, if you go in there, it's just a little fun place to be at, and he provides me all my t-shirts. He's my guy. So props to Johnny. Thank you, and I appreciate the question. How do you see negative infinite amortizations playing out at renewal? Okay, well, this isn't going to be fun. Okay, this is not going to be a fun situation for folks. OSFI and banks have been directed at renewal for folks that are in negative or extended amortizations beyond what they started at. They've been directed to bring them back in line. Okay, so we're seeing a lot of folks when we pull their credit bureau, they started a $700,000 mortgage, the balance now is $707, $710. It's because they're going backwards. They're not even making the interest payments. And these are primarily BMO, CIBC, TD. Royal Bank doesn't have that problem because they have a requirement that you have to pay at least $2 in principal. So they're not seeing negative amortization, but the other three are. And those folks have to go back in line unless they ask for an exception, and that's going to prompt additional increases to that payment beyond just the interest rate. They have to catch up on the amortization as well. So if somebody's sitting at a 60-year amortization, they got to come back in line at 30 years if that's where they started, less 5 years, so they got to go to 25 and get on that schedule so that they keep up to date and maintain that original amortization schedule. So these people are screwed. Okay, it's not going to be fun, it's not going to be pleasant, and it's going to be a rude awakening. And the problem is a lot of people don't know what's going on. Okay, remember, 5-year terms are a long time. Renewal dates sneak up on people, and they get this surprise 4, 5, 6 months before maturity because the bank sent out the renewal document or an early renewal document, and it just hits them right in the face, and they don't know what's going on. We see it. We see it all the time. So it's not going to be pretty. I'm seeing many homes relisted with the price they want after holdout failed. Will this continue? When you have a lot of inexperienced realtors in the marketplace, these things happen, okay? You have novices trying to do an experienced person's work, and it causes problems. Be truthful with your client. Set the proper expectation and let them know this is the market. This is what things are selling for, okay? Everybody believes their house is their castle, and I respect that. But at the same time, if you're just trying to get a listing to lock them up for 60 or 90 days, you're doing everybody a disservice. So be truthful, use a pro, and deal with realtors that are going to give you the goods on the market. Unfortunately, many sellers are not going to like what they hear. Okay? The market shifted. Affordability is down. Interest rates at these levels have restricted people from spending like they did a year and a half ago. And if people don't want to believe this, then go through the exercise of listing your house, being frustrated, and blaming everybody that, fuck, your agent didn't do a very good job because nobody came. It's going to happen. So deal with a pro. Deal with someone who knows how to evaluate the market and give you the goods, shows you the comparables, and validates what this listing price should be. Do you know about the Smith maneuver? Is it real? Okay. Well, the Smith maneuver is a strategy. The founder of the Smith maneuver is Fraser Smith. I met him years ago. I don't know if he's still alive, but he was out in BC. And out in BC, there was a ton of credit unions that offered revolving lines of credits attached to mortgages prior to the big banks offering them today. And the whole strategy is that you would set up a mortgage. As you pay down your mortgage, you re-advance the amount that you've paid down and you put it into an investment, okay? And they would, whether it's equities, mutual funds, you put it into an investment that you can now deduct that interest. That interest would then be tax deductible, provide a tax refund, and you'd make a lump sum payment to your mortgage with that income tax refund, and then you continue to do this every month, okay? Very, very attractive tool, a little bit complicated because you have to set up different accounts and you can't commingle lines of credit usage between tax deductible use and non-deductible use. You really have to keep that tracked properly, because if CRA believes that the funds have been commingled, they could disallow the tax refund. It's pretty complicated. Now, having said this, when we got into the low rate environment, this strategy wasn't very effective, because the amount of interest that you were being charged on the investment debt, there wasn't much to deduct and wouldn't generate a significant amount of tax refund. But as rates have become elevated, it's now becoming more popular again, because that tax refund is the driver to accelerate the repayment of debt. So when you think of it, think of two elevators going up and down, or a seesaw. You're getting rid of bad debt and you're increasing good debt. So your goal is to accelerate the repayment of bad debt, add on the good debt that's tax deductible, tax refunds, pay down your mortgage, and you re-advance and buy investments, and you're building an equity portfolio or a mutual fund portfolio, you're deducting income, and all that mortgage debt becomes tax deductible. A little bit more complicated than that, but that's the nut of it. Hopefully I've explained it pretty well, but if you do need some more information, please let me know. Have a great evening. Enjoy the weekend. See you next week.